Governor Marwan Marko of Nikkei Asia, at the moment the dollar exchange rate is trading around 300 to a dollar. Couple of weeks before the elections on the curve, it was sitting at 320. I mean, outsiders.
No, not correct.
Wasn't it?
It didn't go to 320. I don't.
320.
No.
The curve, no.
No. It went. Foreign exchange market spot average rate went to 305 maximum just before the election, a couple of days before. Then came back to around 300. 305 to 300, the spot exchange rate in the interbank market.
Yeah. Anyhow, international observers and will be looking at the exchange rate as one indicator on where the country's economy is going forward, because you're having a transitionary period. Of course, your predecessors, as you all know, defended the rupee at 200 to $1, which contributed to the crisis. Are there levels of anxiety that you are concerned where you may have to, as the central bank has to get more active in terms of the exchange rate, if it was to weaken to 320, 330, that could boost exports on the one hand?
I think the question, as I just explained in Sinhala, how the exchange rate is determined in our current monetary policy framework is obviously determined through market demand and supply, and also other key macro factors, the current account balance, remittances, foreign exchange earnings, exports, and tourism. Right now they are doing well. And in addition, if there are any investment inflows and outflows, and also level of reserves that we have. So on that basis, but your observation, I'm not quite sure international investors are looking at the exchange rate and determine how economic performance. I think that's, in our view, is not the right way to look at the country's economic performance. It's mainly key economic indicators within our control. So our responsibility is to maintain inflation at low and stable level, that as we agreed with that is the key mandate that central bank has. So we are trying to maintain inflation within those targets. Exchange rate will be determined by the market forces. The short-term volatility changes can happen, but only thing what we do is to intervene to smoothen out any kind of sharp volatilities and letting the market to determine the exchange rate based on demand and supply, while also trying to build up the external buffers in terms of foreign exchange. So I think if any international investor is interested, I think I would suggest that they need to look at all the key macroeconomic fundamentals to determine how we are doing, not necessarily the variation, day-to-day variation in the exchange rate.